to another episode of Banking Matters. I'm your host, Linsey Hugueley, and joining me today is Kristina Cunningham. Kristina is Senior Legal Counsel and Senior Vice President for Origin Bank, where she handles a wide array of legal issues, including managing litigation, overseeing compliance with and processing of subpoenas, garnishments, levies, receiverships, and search warrants, providing guidance on fraud claims, negotiating vendor contracts, letters of credits, DACA, and forbearance agreements, writing policies and procedures, and providing guidance on many other legal and regulatory issues. Prior to joining Origin Bank in 2023, Kristina was a skilled commercial litigator focused primarily on financial services, banking, securities, and employment-related matters. She is a native Houstonian who received her undergraduate degree cum laude from the University of St. Thomas in 2003 and obtained her JD at the University of Houston Law Center in 2006. Kristina is a member of the State Bar of Texas and the State Bar of Louisiana and is licensed in the United States District Courts for the Southern, Northern, Western, and Eastern Districts of Texas and the Fifth Circuit Court of Appeals. Welcome, Kristina.
Thank you, Linsey. Thank you for having me.
Yes. We have got such a great topic to dig into today. But first, here at Banking Matters, we always like to hear how our guests got their start in banking.
Well, I kind of took an unconventional route. Right out of law school for about 2 years, I worked as a public defender and then had my fill of the criminal defense side of things. So then I moved into civil litigation, where I practiced predominantly securities litigation, representing broker-dealers and brokerage firms, with a little bit of litigation representing financial service clients. And after about 9 years of that, I did transition to mainly representing financial services industry in litigation. I would say about 90% of my practice involved representing banks. On occasion, I would represent a customer, but when I did represent a customer, it was going against one of the 3 big banks, which is a little bit of a different animal. But approximately 2 years ago, I joined Origin Bank's legal department, which consists of myself and the chief legal officer of the bank. And as such, I see a wide variety of matters that the bank has, whether it's managing the litigation or reviewing, any other regulatory compliance issues or negotiating contracts, letters of credit. It's the whole gamut. And what we've seen increase in part because our footprint, Origin's footprint, has increased across 5 states. That combined with the growing population that is aging, we're seeing a lot more of powers of attorneys and guardianships. And that's why this is kind of an important topic area. And I think that Origin Bank isn't the only bank that's faced that.
Absolutely. No. So my role here at Compliance Alliance, I'm a virtual compliance officer. So I get to work with a handful of banks scattered kind of across the country, and every single one of my banks, we've been through unique situations. Majority of them are smaller, where they know the customers, they know what's going on, but they're still worried about this document that they've been brought. And again, some of them are smaller, so they don't have counsel in-house. And so navigating and knowing what to look for in POAs, guardianships, all of these types of situations, I think will really help our listeners. So do you have one that you want to start with that we kind of want to go through?
I guess we could start with powers of attorney, because I think those are the most common things that you're going to see. I mean, most people, when they're looking at managing their affairs and what are they going to do when they may need help from someone, they turn to the power of attorney. Guardianships are a little bit more rare, but we have started to see more and more of those. And often when we do see a guardianship, you're not dealing with a guardian that is a family member. It's typically an attorney who's been a court-appointed guardian for that individual. What we've seen with the powers of attorney, especially since the Texas legislature several years ago mandated that banks had to accept powers of attorney if they met the statutory guidelines, is we're being presented with these statutory durable powers of attorney that track the statute, but there are some concerns that you may see, that I often see, when you look beyond that. Often it may be a caregiver or non-family member presenting a power of attorney. Sometimes it may be an individual that you know your customer well, but you've never heard of this individual, and they come in with the power of attorney, and your customer's not there. And so, luckily, the Texas statute does provide reasons or provisions under which you can reject that power of attorney. And some of them are very specific and some of them are very broad. I would say, when you're looking at a power of attorney, you want to make sure a few things: that you can identify who the principal is, or that's the person granting the power of attorney to an agent. And you want to see if there's one agent or two. Every once in a while, I have seen where there are co-agents. I think any estate planning attorney would discourage that, but it doesn't mean you're not going to see that. And you also want to make sure that the power of attorney has been signed and notarized. One issue that did present itself to me, and so I was not aware of this, so I will bring this up. If an individual, due to a physical infirmity or, basically a physical reason, even if they were illiterate, would possibly apply, they can, in fact, sign their name with an X. There is a Texas statute that allows for that. Of course, you would want to reach out to your customer and confirm that that is, in fact, why they signed their name with an X. Like I said, never had seen that before, saw it, said absolutely not, we are not accepting this. And then got pushback from the estate planning attorney who said, well, look, this is this relevant statute, so it is possible. So when we get a power of attorney in the bank, if it meets all the requirements, it's, complies with the statute, and this is just for statutory durable powers of attorney, which are effective upon execution, then we have a form at Origin Bank that is titled Important Notice Regarding Powers of Attorney. And it's something that I would recommend any bank consider having. It sort of sets forth the legal rights of an agent under a power of attorney, and it explains to the agent and the principal, the customer, that these are the rights the agent will have, and that could include, making transactions in their account. No one in the bank is going to be monitoring for every transaction. And it also includes some great hold harmless and indemnification language that protects the bank when you are accepting that power of attorney. Now, like I said, we have both the agent and the principal sign this important notice. There are circumstances where we know the principal does not have the capacity to sign either. Let's say they have Alzheimer's, and so they really don't have the legal capacity to sign. In that instance, if we are comfortable with the customer and the agent, and we have an ongoing relationship, we might accept just the agent's signature on that form.
I will say, taking that extra step to educate both the agent and the principal on what their rights are, I think that's a great step that pretty much any bank can take when you are accepting a POA, because I know, because sometimes people get those and they don't really understand the power that they are actually giving someone else. And so I do think that's a great way to educate people, especially your customers, like you said, that as they're going through this or trying to put a POA on their account.
Correct. And it's important, I would say, that if you are going to reject the power of attorney, it's important to keep in mind that you have 10 business days from the date that the power of attorney is presented to the bank to either accept or reject the power of attorney. If you are going to reject it, you have to provide a written reason for that rejection. And there are several reasons under the Texas statute. I'll hit on the big ones. I think the big one is if the agent is coming in trying to open an account for the principal and the principal is not already a customer, that alone is a reason to reject the power of attorney. And often that is a red flag, because I would say in most of the power of attorneys we are presented with, the principal is already a customer and has been for some time. And another reason is if the principal, when they're presenting the power of attorney, is looking for a particular product or service that the bank doesn't offer. That's another reason that we can reject the power of attorney. If the bank has a prior dealings with the agent where it has caused a loss to the bank, that is another reason to reject the power of attorney. What the reason we use most often is a sort of catch-all. If we believe that there might be financial exploitation of an elderly person, and if we believe that because of the mandatory reporting statute in Texas, we must file a report with Adult Protective Services. I will tell you the frequency with which they follow up on that request is minuscule. And I think I'm being generous when I state that. But if that is a basis to reject the power of attorney, if you have, and it's essentially that the bank has made or has knowledge that someone else has made that the principal might be subject to physical or financial abuse or exploitation. That is the most common. Now, I will say this anecdotally because you need to keep in mind that while you may initially reject a power of attorney, you may gain additional facts through the course of, speaking with the principal and the agent that might change your mind. We had one such a case where the agent came into the bank with her mouthy husband who, because he was just providing extraneous information, we had reason to believe perhaps the principal did not have capacity to execute the power of attorney. And it was several months later when finally the attorney who prepared the power of attorney provided an affidavit and said, look, the principal had been my client for several years. I was engaged with her in drafting this power of attorney. This is why this individual was selected. And that affidavit essentially said, as the attorney who was there when this power of attorney was executed, the principal had the capacity. And then we changed our position after several months.
Right. Well, and I think of it, I've been in a small community banks in my career before joining Compliance Alliance, and then now the banks that I work with, majority of them are very ingrained in their communities, and they know that what's going on. And we have had an incident where we did deny it, but then we, like you said, there was information that came to us that was allowed us to change our stance on accepting that power of attorney. But like you said, that initial situation when it came in, it was really, really sketchy. No one was being very forthcoming and clear. But we did, it took a couple of weeks, but we finally were able to have that information to be able to feel confident in what we were receiving and that our customer was capable of signing the document.
And Linsey, even once you accept the power of attorney, the analysis kind of doesn't end there. It's very important to know that doesn't change ownership of the account. Anytime that the agent is signing any checks, they would sign, the customer's name by their name as POA. That's an important fact at origin in order to sort of limit the ability of a agent to engage in self-dealing. We do not issue agents debit cards. And while they're given online banking access, it's limited to view only. And that's sort of twofold. One, if full online banking access was granted or a debit card was granted to to an agent, they could engage in self-dealing. But the second fact is you could have a situation where your principal has passed away, in effect terminating the validity of that power of attorney. It's no longer effective, but an agent doesn't alert the bank, and so they are able to still engage in transactions, withdrawals, debit card purchases. Then you have someone else come in, notify the bank that, oh, well, the customer was deceased. And while legally the bank is not liable in any way, shape, or form, as I think all of us know, it never prevents an attorney from, asserting demand or even filing a lawsuit at a bank in hopes of extorting some sort of settlement. So we
Yes,
try to limit that issue by putting those restrictions.
absolutely.
And
So,
another,
oh,
sorry,
go
go
ahead.
ahead. No, no,
No,
no. Go ahead. Well, the only thing I was going to add, a PO agent also cannot change beneficiary designations. In fact, in Texas, there is a statute that says if a PO agent does change a beneficiary designation, it is considered void as a matter of law. The exception being if the new beneficiary is someone who would be a direct person to inherit under the intestacy statute, but it still can be challenged. It's just not a complete bar. So we also ensure to prevent that. And then finally, when you have a customer, whether well, there's sort of two things. If a customer is deceased, we are notified, then the POA is no longer effective. If the agent comes in and says, well, look, I want to close this account and open a stated account, the answer is no. We need, letters of administration, letters testamentary to do that. If it's just a simple case of, the agent comes in and says, look, we've moved mom closer to us and there's not a branch near us, so we want to move her accounts. In that instance, we will close out the account, but the cashier's check is made payable to the customer, not to the POA agent.
yeah, those are really great. I like just steps that to be banks can put in their procedures to safeguard themselves, and it really helps just kind of keep those guardrails in place throughout the life of the relationship when you're dealing with the POA. Because, like you said, we may not get immediate notification when our customer dies, and so a lot of times there is that window of time when someone could take advantage of that.
Exactly. And I think we can all agree no one wants to be caught amongst feuding family members or adult children of a deceased customer.
Absolutely not. Absolutely not. So, another one that I wanted to talk about was you had mentioned guardianships earlier and said they're a little more rare. So, what are some common nuances with those?
The nuances with guardianships are that there are similar to any other court proceeding you might see where you're looking for a court order. So essentially, in order for a guardianship to a guardian to be granted, a court's going to have to find that the individual, in our case, it would be the customer, lacks the capacity either mentally or physically to manage their financial affairs. Now, there are two types of guardianships. There's guardianship of the person and guardianship of the estate. We're not really going to deal with guardianships of the person. That's going to be more your medical providers and people like that. But commonly, the guardian when a guardian is appointed, they're both the guardian of the person and of the estate. And so once a court has found that an individual lacks the capacity to manage their affairs and a guardian is appointed, there will be letters of guardianship provided to the guardian, similar to a letter of testamentary or letters of administration. And so you will need a certified order appointing the guardian, the letters of guardianship. And then all letters of guardianship in the state of Texas are only good for 1 year because the guardian has certain reporting obligations that they must make. They must make annual accounting. They must keep a bond posted. And so you will see that a letter of guardianship will expire, but the court should renew that letter every year and issue a new letter. Guardianships, very similar to POAs, they do legally, they terminate when the ward, which is the same as the principal in a POA, when the ward dies. But the guardianship sort of remains open because the guardian must do this final accounting. And so while you can't let the guardian continue to engage in transactions in the account once the ward has been deceased, it won't be unusual that the guardian might still be accessing bank statements for the, up to the date of death in the preceding period in order to make their annual accounting. And then eventually the court will issue an order closing the guardianship.
Gotcha. So one of the main things I'm hearing between the difference when POAs and guardianship is there's a lot more court involvement, or court mandating from the guardianship that banks need to be aware of, and making sure that they're not acting without those from the court.
Yes, and what I will say, when you're dealing with a family member that's been appointed a guardian, that's a different animal than when you're dealing with a court-appointed guardian. I'm friends with several attorneys who in fact, are court-appointed guardians. That is how they practice law. And I became friends with them working for banks and trying to work with them to get them the documents that they need. So it's not unusual to have an attorney present you with letters of guardianship seeking, documentation. And if you want to ask for a certified, court order appointing them, you can feel free to do so. But they are given the same rights as a family member who's been appointed guardian.
Gotcha. So are there any common pitfalls with guardianship or challenges that you guys, especially through your practice, have seen?
We have not seen that many problems with guardianships. I think the thing that I see most often is when you have the death of the ward. And so you have one person that's the executrix of the estate that's trying to handle the estate matters. But you still have the guardian trying to make their final reporting and their final accounting. Often if it's a family member who was appointed guardian, that's often the same person. But when it's not, you can receive conflicting requests or demands from the executor and the guardian. And what's important to keep in mind is you have a legal obligation in accordance with the court order appointing the guardian. And so you can comply. As long as we're complying with the court order, we're protected, right? And so that's really the only issue that you see. But it is important to make sure that, like I said, with that letter of guardianship expiring, if you have an expired letter of guardianship, even if the guardian says, hey, look, I'm working on the accounting, it's taken some time, we can understand that. But until we have a new letter of guardianship, we cannot allow them the same access that they might have had.
That's another good, kind of, again, just educating employees on what we need to do, what we need to be looking for, and how we need to respond when there is a gap, especially in these, especially if they're annual. That's pretty frequent.
Yes, it is. And I think we can all agree, the older we get, the more that annual time period seems to squeak by.
Absolutely. So one more kind of gamut of areas that I want to talk about. What about trust?
Trust. Oh, goodness. I wish I could tell you every type of trust there is out there. I'm presented with a new type of trust I was not aware of. That is why estate planning attorneys are very lucrative, is they know about all of the different types of trusts and the tax benefits of them. But I'll hit on the high notes. Yeah. If a trust is irrevocable, it has to have its own tax ID number. And that includes, because I get this a lot, it's an irrevocable trust, but it's a grantor's lifetime trust. And so you will have a customer that says, well, the IRS says I don't have to obtain a new, tax ID number. I can use my social security number. Yes, that is true. But the IRS also provides comments on the regulations that say banks and other financial institutions might request a tax ID number from you, and you can still obtain a tax ID number for the trust and still file on your own 1040 tax return the trust information. So if it's an irrevocable trust, we always ask for a separate tax ID number. If a trust is revocable, once the grantors die, it becomes irrevocable. So you might have had a revocable trust that you were reporting under the grantor social security number, the grantor dies, then it becomes irrevocable, the trust at that point, and you're going to probably have a new trustee, likely, but maybe not. But at that point, you're going to need to obtain or have the customer obtain a new tax ID number. Another frequent thing that we see is a trustee coming in and wanting to open an account or add additional signers to the account that are not the trustee. That is not allowed. I mean, the trustee cannot delegate, and there will be provisions in a trust agreement that say, the trustee can hire attorneys and hire accountants and things like that. Yes, but the trustee cannot delegate their authority to an authorized signer. If they're unable to, manage the account, then their option is to resign and have the successor trustee appointed. That includes the grantor. If the grantor is not the trustee, the grantor cannot be an authorized signer on the trust. Another thing that we look for is when we get a trust document that is fairly old, we will ask for a updated trust certification that essentially, lays out who the current trustees are, who the beneficiaries are, any successor trustees, and affirmatively states that the trust has not been revoked. And that's important just to protect the bank. And I would also say sometimes you will have customers who will not want to give you the full trust document. They will want to give you just that certification of the trust. And so sometimes we will accept those. It depends on, and that's really more of a business decision. Is this a long-standing customer that we have a great relationship with? Then on the business side, we might say, okay, we'll accept that alone. That is not the default. The other thing that I would add that we are seeing more and more commonly are what will appear to be a standard trust agreement. But if you delve a little deeper and you really read it, it is a form. These are normally from sovereign citizen type folks who they are the grantor, they are the trustee. It has none of the traditional provisions in a trust agreement. They will sign their name with a stamp that says no recourse. We reject those. And generally speaking, we reject unusual trust agreements when the individual who's coming in is looking to establish a new relationship. It's not an existing customer.
Right. And so and so thinking, because we've gone through all three of these so far, what are some of the really common, just those things that banks get tripped up on with trust? So you said that most of the time you always want those documents. Do you have procedures in place to make sure like your frontline are trained and that they know what they're looking at, or do you review every trust document for you guys before we accept them?
So the procedure that Origin currently has is when a trust agreement comes in, the banker can review it, but it must be reviewed by the banking center manager. If the banking center manager has questions, then it can get sent to both legal and compliance. There are job guides that are available on our intranet about trust. That being said, I am in the process of revising this procedure, and we're going to have a new attorney joining us when she passes the bar later this year. And at that point, trust will still go to the branch manager, but there will definitely be more of a push to send it to legal. Additionally, sometimes if the banking center manager approves it, once it gets to our department at the bank that reviews new accounts that were opened in the documentation, sometimes they will reach out to me if there's an unusual trust. Recently, we had a trust that was not notarized. And when I said, look, we need the trust agreement to be notarized, the customer pushed back and said, well, Texas law doesn't require it be notarized to be effective. That is true. The law can say that the trust is effective just upon the signature of the grantor and the trustee. But as a financial institution, as a bank, we can say, well, that's not enough for us. And so we want our procedure and our policy is that it must be notarized. And the reason we have gone that route is any estate planning attorney would say, by having the signatures notarized, it prevents challenges to the trust document. And we want, as the bank, we want the protection that that notary block provides.
Right, absolutely. And so I know, oh, I lost my train of thought. But with trust, I do know that we've had several incidents where banks have asked questions, and I love how you state, yes, the state law can be here, but our procedures and our standards for our own institution can be a little bit higher as to safeguard us and limit our exposure to anything. Because, like you said, nobody wants to be in the middle of anything, honestly, in regards to estates. That's what my dad has done his whole life. He's been in the legal area my entire life, and the stories are wild.
Oh, I bet. I bet.
Wild. I've witnessed a few of them myself and everything, just working with him and for him. But I do think so. One last question before we wrap up. What about specific policies? Do you guys have specific policies that address estates and trust? Do you cover that in your CIP, or is there a separate policy?
There is a policy regarding powers of attorney and powers of attorney and trust.
Okay.
I mean, and it sort of, we have set ours up because we're in 5 different states to sort of by state. What does the state require? When does our policy go beyond that? And that's helpful to your frontline employees because I'm sure everyone can agree in the legal department to have to review every power of attorney that's presented or every trust that's presented. I mean, that would just, it could take up all of your time. And so having, strong policies that are easy for your frontline retail people to understand does help with the processing of the powers of attorney and minimizing risk, but also letting the frontline know, look, if you're uncertain or there's something in the back of your mind that's telling you maybe something's wrong with this, to let them know that the door is open to come to legal, I think is very helpful to also minimize risks.
Yeah, absolutely. I definitely always try to foster an environment and a culture of being able to ask those questions so that hopefully whoever is asking the question can take that into a future situation and hopefully move forward without needing kind of that backup. For sure. So we do, as we wrap up, Kristina, we do always ask our guests, what's one piece of advice you would like to leave our listeners with?
Oh, goodness. I think the one piece of advice I would leave, which is sort of counterintuitive to someone who, went to law school, but trust your gut. I mean, I know that sounds crazy, but it can get to the point where you see the same documents over and over and over. But if there's something in you that's like, man, there's just something slightly off with this document. There's, the banker says, I don't know the person that came in and presented this. They seem nervous. Trust that because odds are you're going to be right. And if you're wrong, you can remedy that. But I can't tell you how many times I've heard someone say, I had concerns about this, but I didn't want to say anything. And you only hear about that once there's a problem, right? So just trust your instincts.
Absolutely. Absolutely. Well, thank you so much, Kristina, for your time and your information. And for the rest of our listeners, that's Banking Matters.